What is going on, guys? Today I have another great video for you. We are going to be talking about Alibaba once again, one of my favorite stocks in the stock market right now. There is a lot of volatility going on with this stock, and it is to be expected because the market has a ton of volatility going on. So we are going to actually take a look at, some of the recent news. We're going to go over that real quick, and then we're going to go over some of the earnings expectations in this video because I think that is going to be important, especially over the next year. What we're going to see is a lot of low earnings expectations. And that can set up for big results in the future. So if you enjoyed the video, make sure you drop a like down below. And if you want to see more videos like this one, make sure you hit that sub button. Let's start the video by taking a quick look at Alibaba's chart. So Alibaba was down over 2.5% on Friday. The market overall tanked through the floor on Friday as some of the expectations from FedEx reported some guidance and some earnings that was very low, and the market overall did not like that because FedEx, they're obviously have a lot to do with e-commerce and commerce in general. So if they are reporting bad numbers, that kind of tells you overall that a lot of commerce companies are not doing too hot. So here, Alibaba suffered as well, and overall in the week they suffered a lot. They were down 6.5 almost percent on the week. So that is absolutely a massive move down for 1 week for one stock. Overall, it has been a slow week for news on Alibaba, but what has happened in the last week is a lot of auditors are expected to start arriving in China. So what we have discussed in previous videos is recently US and China came to an agreement that the US auditors can now go in and actually to Hong Kong and audit a lot of these Chinese companies. So this is absolutely huge news, and we didn't see a huge effect in the stock price, which was kind of a little bit surprising, but a lot of that has to do with the expectations from the audit, right? These auditors need to get all the information to basically give the thumbs up that Alibaba is able to stay listed, right? They need to make sure that they don't find anything weird going on with the books, anything, illegal or sketchy by US terms. And then they report back to the SEC whether, they give a thumbs up that, everything looks good with Alibaba, or thumbs down that Alibaba needs to be delisted because they're, writing or doing something illegal with their books. So overall, that's really what we're expecting. I would expect in the next couple of weeks that we'll start to see a lot of news out of China from how these audits are actually going. And one thing that hasn't really been discussed, or I haven't even discussed on my channel, is how some of the COVID regulations in China will actually affect some of these auditors, because they still have some travel regulations in China, and specifically they have a lot of lockdowns in China. So if for some reason Hong Kong or some of these other cities have a huge spike in COVID cases, then we may end up seeing, some more difficulties with the audits as some of these cities shut down. So that is something to keep an eye on in the background for these audits. The main thing I wanted to look at from this video is where Alibaba is sitting in terms of earnings and earnings expectations. So earnings expectations are huge because if a company is offering poor guidance, right, the stock will already try and price correct for that guidance, right? Investors in general tend to trust, if Google reports and says that, hey, we're going to have a bad quarter next quarter, then the investors trust that that is going to come true and that they already start pricing that into the stock. So that is very important. And that is something we have seen with Alibaba, right? The stock has fallen all the way through the floor because it's starting to get priced, or it has already basically been priced as if it is going to be delisted. So it's important to keep in mind that the market is always trying to look ahead, right? Investors are always trying to see, okay, what is going to happen next? And the stock price is not necessarily going to reflect what is happening now. It's going to reflect the expectations for the future for a company. So it's important to look at these numbers and understand what that means for the stock. And here we have an article that goes over a lot of Zacks estimates. So there's a lot of Zacks ranks and things like that. Basically, Zacks is a company that overall looks at a lot of companies, a lot of stocks, and basically gives their opinion on it. So they'll give a buy rating, they'll give a hold rating, they'll give anything like that. So they're just a big analyst company. So they have looked at Alibaba, and basically we'll just go through some of these points. So the consensus earnings estimate of $7.64 for the current fiscal year indicates a year-over-year change of minus 8.1%. So that is right, a huge downward move. And a lot of that, has to do with, two big factors. One, the continued lockdowns in China, and then two, the overall housing collapse that we're seeing in China. And one thing that China is doing to mitigate some of those factors, right? The lockdowns, they still haven't gotten over that hump. That's one thing that I'd love to see out of China is, getting away from lockdowns in a lot of these big cities. But number two, what they are doing, and they've already started doing, is actually lowering their interest rates. So that is absolutely huge because they're going to basically stimulate their own economy. They have been a little bit different than the US, where they have kept interest rates. They lowered them down, but not to the same rate that the US did. So they still have room to lower their interest rates even more. And again, this estimate actually provides a lot of opportunity, right? Because what we're seeing is, if we have a terrible year this year, if they have a good or average year next year, the expectations will be there, and the stock price should recover slightly from, where it's sitting at now. And then for next year, what they've actually estimated is $8.33, indicating a year-over-year change of almost 9+%. So again, if they can beat this 9%, which I don't think is, out of the realm of possibility, right? If we get past some of these lockdown concerns, and if China, stimulates their economy in a reasonable way, then what we could see is, again, a lot of growth there and potentially get over double digits, right? Alibaba has been a double-digit growth company for a long period of time, and if they can get kind of back into that after going through this little hump, that'll be huge for the stock price overall. Another important metric to look at is revenue, and revenue for the current quarter is sitting at an estimate of $31.89 billion, and that represents a year-over-year change of positive 2.4%, while revenue for this year and next year is estimated at $136.59 billion for this year and $154.64 billion for next year, and that represents a 2.5% positive change and a 13.2% positive change. So overall, there's a lot of projections out there that, Alibaba is going to continue growing, and that is good and bad, right? Because, right, if the Chinese economy comes down and we see it start to correct down and we actually start missing a lot of these numbers, then that will negatively affect the stock. But overall, these are numbers that are very low, right? They're only expected to grow, around 2.4% year over year, 2.5% in terms of the total fiscal year, and then 13.2 for next fiscal year. 13.2 is actually a relatively small number for Alibaba. They've kind of seen around 20 to even 30% growth over the last few years, and that's been obviously huge for them and helped their company grow quite a bit. So 13.2 is not out of the realm of possibility for them to blow past it, but that's kind of what they're setting up for. Is, again, these expectations on Alibaba, they're not really super low, but they're also not incredibly high. So they're kind of somewhere right in the middle to maybe a little bit on the lower side, which again presents a little bit of an opportunity for them to, beat these expectations, and overall the stock, have a lot of catalysts behind it going into potentially some of these audits, being approved and Alibaba being able to stay listed on the US stock market. So again, all these numbers are estimates, so it's important to look at where have the actual numbers come in compared to these estimates. So Zacks consensus, their revenue estimate was actually a surprise of 1.5%. So basically Alibaba reported slightly worse revenue than Zacks had predicted, but their earnings was over 15% surprise to the positive side. So that is absolutely huge, right? And would be a catalyst for potentially a big move, right? If we see a lot of, surprises to the upside for a stock like Alibaba that's been beaten down so much, and market sentiment isn't overbearing a stock like that, then that could potentially set up, again, a lot of catalysts for the stock to make a big move to the upside. But to be honest, the problem with Alibaba stock is not anything to do with the underlying business. And that is a really important thing to remember, is that the business overall is doing really well. And we can see that from metrics like these. So the forward PE ratio, we are sitting at almost a 10 PE ratio, which is absolutely insanely low for a company that has been compared to something like Amazon. Because, right, we're sitting at a 10 PE ratio, and just previously a year ago, even though the stock was being hurt at this time, we were sitting at over double that PE ratio. We're sitting at a 23.36 forward PE ratio. Price to sales is also incredibly low. We're seeing almost a third of what it was last year. And then price to book ratio, again, we're seeing over half. It's down over half. And these are absolutely insane numbers, right, to look at, especially when you compare it to some of its peers, especially US peers, because overall, again, the big concern with this company is not the underlying business. It is whether it is going to be delisted or not. And that is something to keep in mind as we're looking at the stock, and if you were going to add a position, right? Because overall, the question is, if you think the stock is going to be delisted, then do not buy the stock. If you don't think the stock is going to be delisted, the fundamentals of the underlying business are still there, and they are still very strong. So I wanted to end off this video by taking a look at Alibaba's chart from the perspective of, is it a good time to buy? And in my opinion, right, we've seen a lot of support in this range where we're sitting at right now. So the stock did go down all the way to around $75, and then it bounced up, and we saw it retest this level 3 times. And this level is around $181 to $184. And right now we're sitting at $86. So again, if we see a little bit more of a downward move, we could see it kind of approaching these 3 levels that it's hit 3 times and bounced off of. And that, in my opinion, shows a lot of support there that is a good potential of, adding to your stock position. Personally, I have built out my position to where I am comfortable at. I'm not looking to add a whole lot more of shares, maybe a few $100s here or there, as the stock kind of bounces around in this range. But overall, I'm comfortable with where I'm at, and where I've built my position at, and my cost basis isn't, ridiculously high. So I feel fine with it. But again, in my opinion, if I were new to this stock and I was looking at Alibaba stock for the first time, I would see this as a really good opportunity to get in at a point that has shown a lot of support for the stock price. So again, that's just my opinion. Obviously, evaluate the stock for yourself, look at the charts, look at the numbers behind the company, and make an opinion on whether you want to buy or not buy or whatever you want to do with the stock. So again, just my opinion on the stock. I hope you guys appreciate it. And if you did, make sure you drop a like down below. And if you want to see more videos like this one, make sure you hit that sub button. And as always, guys, have a wonderful rest of your day.